Happy holidays! What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. If it's your first time tuning in, do me a huge favor. Hit the notification or subscribe button so you're notified every time we go live or post new content. We go live on Facebook and YouTube at 9 p.m. Mondays and Wednesdays, and we post our content Sunday mornings and Wednesday mornings at 9 a.m. So definitely join the Wham fam so you know what's going on. If you're serious about home ownership, this is the channel for you. All right, guys. And tonight, I am going to go over how I bought my home in 2020. But before we get into that, everyone has been asking me, Min, what's going to happen in 2021? This is my prediction and my opinion. Based on the facts and data that I've seen, unemployment is really not affecting the housing industry because most people who are unemployed don't own houses in the first place, which means they're not letting their houses go. The people who are on forbearance, there's under 3 million households in forbearance right now, and only 9% of them are upside down. So the other percentage of them, they're not upside down. So if they can't make their mortgage payment for some reason, they can sell their home with equity. Okay. So because of unemployment not really affecting the housing market, forbearance not really affecting the housing market, and the exodus, most Americans, most Californians who are leaving California, majority of them don't own houses in the first place. So everyone's talking about all these homes flooding the market. There'll be tons of inventory, not enough demand, right? I hear that all the time, but the facts right now do not show that. Okay. So I think 2021, I think things are going to be fine. If this one is my opinion, if rates do go up, it might slow things down, but it's not going to cause some huge flood of homes in the market, right? With people losing their homes. That's not going to happen in 2021. If things get tight, everyone who refinanced and lowered their rate are all going to hold on to their property, which will keep demand up. Okay. So that's my prediction in 2021. But if you didn't buy your home in 2020, I'm going to tell you my story on how I bought my home in 2020 so you can use the strategies. Or some of you guys can be, oh, I feel you, man. I understand you completely, right? And use those emotions, those feelings. Like, you know what? And men went through this in 2020. How am I going to buy in 20? This is how I'm going to buy in 2021. All right, guys. So let me tell you my story. So in 2020, I finally bought my house. But we're rewind from that, right? In the beginning of 2020, I gave up buying a house. In 2019, 18, and 17, I wrote multiple offers. I couldn't get my offer accepted. The homes that I wrote offer on, the values didn't come in. I went 3 years trying to chase a home, chasing for this perfect situation, this perfect deal that never happened, right? I was shooting for the stars. Just like some of you guys were shooting for the stars, right? And when you shoot for the stars, sometimes you set your expectation too high. So in 2007, so I bought a home in 2015. From 2015 to 2017, I lived in a 4,000 square foot home. In 2017, I lost a lot, right? I lost my business. Everything went down the dumpsters. And then I had to go out and I moved back home to my parents' house, right? My wife went out and rented a house and things. Then, a year went by. I was able to get out of my debt. I lived with my wife. But we went from a big house to a little house, and now we might qualify for less home. Why would we leave our house, right? So when I looked at it, when we were finally ready to buy, just like some of you guys, right? I looked at my situation. If I go out and buy right now, the house that I can afford will not match up to the house that I rented or the house I lived in back then, right? So I decided I'm just gonna save more, save more, save more. And I was trying to save more. And every time I went out there, I wrote an offer because I found a deal. It never happened, right? We wrote four, I think six offers from 2017, right, up until 2020. It did not happen. So we, of course, we lost heart. We're like, man, why should I buy? Nothing's ever gonna pop up, right? Especially I live in Tustin. I want to live in Tustin or Irvine, right? Nothing was in the price range that I could afford. Sound familiar? Anything I could afford, I would have to go deeper in, further away from work. But it wasn't my perfect situation. I lived in this huge house back before 2017, and I rented a nice house in Tustin, right? But everything I qualified for was a condo, and I could not swallow the fact that I went from a 4,000 square foot home to renting a 2,400 square foot house to trying to now accept the fact I have to buy a 1,900 square foot home if I want a condo if I want to live in Tustin, right? So just like all you guys, we set these expectations to shoot for the stars, right? And because we don't get there, we either give up or we lose heart. And that right there is my story up until 2020. Okay. So my story in 2020, right? There's my wife and I were like, okay, why don't we just prepare ourselves? We're not gonna buy until 2021. Okay. We're not gonna buy until 2021. And because of that, we just told ourselves we're not gonna buy our house. Our story is we're not gonna buy our house in 2021, but let's get prepared, right? Let's be prepared just in case something comes on the market. So January 2020, right? We came up, we had to make some changes. Okay. The first change we had to make was we had to change our mindset. Okay. We had to change our mindset. We had to be open-minded. We had to be patient, right? We have to have a strategy and get approved if we're gonna buy something in 2021, right? But in 2020, if something pops up, we're gonna grab it, right? So of course, first step was open-mindedness, right? We had to be open-minded. All right, we had to move all the filters. So we're on our home search, okay? I had to take off all the single family, all the, square footage. I had to take off a lot of filters from my search, right? Then I had to change. Maybe I might have to drive a little bit further to work, right? Maybe this home now is not my forever home. I thought because I bought my 4,000 square foot house, that was gonna be my forever home, and ended up not being my forever home. Something that I've learned my lesson, so I'm gonna buy my forever home now, right? But I had to take that off my list too. It's not gonna be my forever home, and I wanted to buy the house with the perfect situation. Which in life there is no perfect storm. Okay, so until I had an open mindedness, I shouldn't be. I'm not ready to be a homeowner. So just like you guys, until you are open-minded, you're not going to be a homeowner in 2021. In 2021, when I wanted to buy, but something fell in my lap in 2020 because I was open-minded. I took the filters out, right? I would change the fact if I have to go further, that's fine. This home is not going to be my forever home. That's fine. I'm not gonna be in some perfect situation once I have all my down payment to put 20% down. Not like I did last time when I only put 10%, 15% down, right? I wanted to have the perfect storm this time because I had a bad experience in the past. But because of all my bad experience and I wasn't open-minded, that's why in 17, 18, and 19, I could have gotten my home, but I didn't, right? Because I was not open-minded. Now I have limited inventory on what I can choose, okay? So first step, be open-minded. If you're not going to be open-minded on what your amenities are going to be, the distance, that this is not your forever home, you're not going to get anything in 2021 because it's still a seller's market. Okay? Once you get past that open-mindedness, now we can rock and roll with the next step, being patient. Being patient and being vigilant, right? Real estate has changed. It will never be the same again. So anything that I heard some of these trolls or your parents or your parents told you about real estate, it's not the same. Before the 90s and early 2000s, right? There was not the internet. Redfin wasn't available. Zillow wasn't available. These home searches. If you had to sell a home in the 60s, 70s, and even 80s, early 90s, for someone else to see the house would be really hard, right? Because a local realtor would have to promote the property. Because of that, only other realtors knew about the property, and that would have to be local realtors, right? Because of real estate agents, they have specific searches in specific counties. Okay, so if you were someone and you wanted to see a house, unless your local realtor told you about it, you wouldn't see it. That's what people don't understand. Those things have changed. So supply and demand has changed completely because more people can see properties now, which is driving up demand. Okay, that has changed, right? You're not the only buyer out there anymore. Because you're not the only buyer, you have to be patient. You hear stories of people buying in the 50s, 60s, 70s, 80s, and 90s, and they're getting houses like that. but they're not anymore because that can't happen. There's too many people that can find that house. Whatever house you're looking at right now, 10,000 people are looking at that same house too. Okay? Remember that. You got to see a lot of houses. It's not like back then. You got to write a lot of offers, right? And it'll happen if you stay active. When I say patient, patient means you're not, patient means you're being patient, you're being vigilant, which means you're proactively looking on your realtor's home search, whatever realtor you're working with, right? You're actively looking on Redfin, you're actively looking on Zillow, you're looking on there to see what's available for you to look at. When I say patient, I'm not telling you, oh, when it comes by, it comes by. When I got my house, right, when we were looking, right, we wrote in an offer for this house down the street from the house I live in now, right? It was a short sale. This guy is a bum. He still hasn't sold his house yet, right? And he kind of pressed us to buy at a certain price, get him out of his liens and all that. He wanted to live in it for a year, right? With paying like under market rent by 50%, right? We were patient. We wrote an offer on that house, waiting to see if he was going to get foreclosed on, right? There was a couple other properties. We kept writing, and everyone we kept on not getting our offer accepted. I was walking in my neighborhood, and I saw this window, right? And when I saw this window, it looks like no one's been in the house. So I asked our local realtor in our area to hunt down the owner for us. She's our local realtor who farms that area, so she knew who the owner was. The owner is in another country. Because of COVID, they couldn't come back into the United States, so he was okay selling his house. But I was patient and I was aggressive, continually looking, right? I was not going to give up because I'm like, if I'm going to buy in 2021, I start acting now because something might pop and hit the market. Okay. So definitely I was patient, but it's easy to be patient once I have an open mind. Once you have an open mind, you'll start seeing more property. As you start seeing more properties, it will build up your momentum. It will build up your excitement. But remember, be patient still. Still actively see more and more homes. The person who's going to get the home is the person who's going to keep digging. People who strike gold are the ones who keep digging when they don't find gold. If you found gold that easy, everyone else will too. And remember, I know we've all been through problems and trials and tribulations in life. So because of that, we missed the boat. A lot of us missed the boat, and it's okay. But because we missed the boat, guess what? We might not be able to get our home like this. There's limited amount of property. The game has changed because of the internet, right? So you got to be patient and keep being vigilant and keep digging and digging and digging if you want to buy in 2021. Who cares if you look for 3 months, 4 months, 5 months? Continually visit your realtor, see property, and then double check, hey, is your realtor the right realtor for you? Maybe it's not you. Maybe it might be the realtor, right? Maybe it's you if you weren't open-minded. If you're open-minded and you're going out there looking at property after property and you're not getting anything, at that point, I might take a couple steps back. It might be my realtor. But you can't say that you didn't give it your all. If you didn't give it your all, you're not going to get anything in 2021, right? There's a limited amount of properties. People who all refinance and lower their rate, they're not going anywhere. They got jobs. That's the only reason why they can refinance. They're not in forbearance. That's the reason why they can refinance. They got a rate in the 2 or low 3s. They're not going anywhere. Why would they go and sell their property and pay higher property taxes? So it's keeping more homes off the market. So because now that you know all this, because of WHAM, you got to be patient. All right. So we're open-minded. Now we're excited again. Now we got to be patient. We're not the only one. The market has changed. Next step, have a strategy. Guys, I say it all the time. If you haven't done it yet, go to our YouTube channel and learn how to use our Techie Lender Calculator, right? Start looking in the areas you're looking to purchase. Now, because you're open-minded, there's more areas for you to look at, right? So start looking in different areas. Let's look at the purchase price. When you find out the purchase price, right? Start running the numbers on if this is the purchase price, what is my down payment? What is my mortgage payment? What is my payment with PMI, right? So we ran our numbers, okay? We had our strategy, right? We figured out our down payment, our closing costs. We ran the numbers. In January 2020, we ran the numbers, what we would buy at. You know, we bought it under my wife because we had some debt that we didn't realize, oh crap, right? We ran our credit in January 2020. We had to start paying down some debt, right? And if we bought in 2021, what is our inflation rate? So the homes we were looking at were about 750, right? So if I take 4% of that, that's about $30,000. If I don't buy a home this year and I wait till 2021, I'm going to pay $40,000 more for my property. Am I willing to risk that? Well, I had my strategy and I ran the numbers on 40 grand. The payment went up almost another 300 bucks. Remember, for every $50,000 right now where rates are at in this fourth quarter 2020, for every $50,000, it's about $300 more a month. So your payment, if your inflation goes up 25,000, your payment might go up $150, right? And the only way I know that is because I had a strategy. I started looking at purchase prices. If I don't buy this year in that area, look up 12 months ago, which you can look on any Zillow, what homes were closing at 12 months ago. See how much that home has inflated, right? Then you figure out your down payment. You run the numbers. You factor in inflation. People do not factor in inflation when they're out there running with their strategy, right? Decide how to save until you get your home. Let's say in 2020, we were like, at most we're gonna spend is 800 grand. 4% of that is 32,000 bucks, right? So we were ready to buy in 2021, but we kept our options open. So we got approved. We had our strategy, right? And our strategy, we kept looking every month. This is January 2020, right? March 2020, right? Our approval expired. The last step, get your approvals ASAP if you want to buy in 2021. Get your approvals ASAP. Why is that? Just in case you have to keep updating your approval until you get your offer accepted, right? In January, run your credit. We were not ready to buy. I didn't plan on buying in 2021, but I had my wife had her credit ran, right? Your credit report is good for 90 to 120 days. Why is the difference between 90 and 120? Let me explain that to you. If they do a soft credit pull after the 90th day, they saw that you went out and tried to co-sign for somebody, or you went and got new credit cards, or you had a bunch of new inquiries, they're going to want to do a hard credit pull. If you haven't, they won't do one until after 120 days, right? Remember, stay away from inquiry. Stay away from increasing your balance. What I mean by increasing your balance, if you have a credit card that has a limit of 2,500 bucks and you have 1,000 bucks on it, now you took that card up to 2,000 bucks. That's going to bring your score down when they run it again. But if you have a $2,500 credit card, you have 1,000 bucks on it, call and get that increase from 2,500 to 4 grand or 3 grand or 3,500, right? But if your balance is still 1,000 and you have a $3,000 limit on it now, it's going to pump up your credit score. That's a tip for you, right? Now, a lot of people talk about that. Look at your trade line. If you are in good standings with a lot of them and you have a low balance and a high limit, increase those limits. It will pump up your credit score, okay? Stay away from not having activity on those accounts either, or they will close out your account, which will bring down your credit score. Do not co-sign for anybody. If you follow these strategies, it doesn't matter if a lender ran your credit. You're just saying that because you're a loan officer and you want to pull my credit. Trust me, it costs a loan officer about 50 to 80 bucks to pull your credit. They're not going to just want to pull your credit unless you're serious about buying, right? So we ran our credit. My wife didn't have the perfect credit. She didn't have bad credit. We just had high debt. So we had a game plan. January, at least we knew where we stood. If we bought in January, I did the payment. It was insane, right? If we got her from 670 to 700, this is the payment is going to be. We had, or we had to get stuck with an FHA loan. So I'm telling you guys, if you're going to buy in 2021, get approved so you can make adjustments, right? In March, we saw when we had to rerun our credit again, right? What we can do to make it better, right? So as we made it better, guess what? Our payment dropped. We went from FHA to conventional, okay? What would have happened if I didn't run my credit, I didn't get approved, we got into escrow in June. My wife ran her credit in June. Now, if I wanted that house, I would have to go FHA. I could not buy out my PMI, right? I would have been stuck with a payment that I didn't love. And our number one rule here at What's a Mortgage, love the payment before you love the house. But definitely, guys, I'm telling you right now, get approved. You're going to buy in 2021, right? Make sure if you need to make adjustments to your credit, right? If you need to maintain your overtime more, so you know your income is not declining, right? Get approved right away. It's good for 90 to 120 days, okay? Also, If you have large deposits, right, they get seasoned. You'll know now when you look at your bank statements what you can't use as assets and what you can use, and what you can't use in a couple months. Then you can use them. The last thing you want to do is wait last minute and get approved. And guess what? Now you have to put more down or pay off some debt last minute. You're not in a position that you're going to be happy when you buy that house. Okay. So in January, we got pre approved. In March, right, we had some adjustments to make. Last thing, my wife filed as self employed. So our tax return, right now we had to file our tax return. So of course we had to increase our tax return. We couldn't write off a lot of our tax return. And because we didn't write off a lot, we owed money. Because we owed money, we were able to set up payments, and that payment also affected our debt to income ratio, which we were able to calculate those numbers together. And we were still able to qualify without paying off all our the money we owe, right, guys? So definitely getting approved ahead of time, especially you're self-employed, is really important, right? Especially during this COVID, a lot of things changed. We were able to maneuver around the changes and still get our home. So in March, right, we had to up in our credit, up in the credit score in January, right? We got it there, and then June, right in June, right, we had our tax returns, we had all the income ready. But if we found our house, guess what? We were going to file with the IRS this income to qualify. And little did we know, I'm walking in my neighborhood. I found the house. I tell Sally, right? What's up, Sally, if you're watching? Sally, right, reaches out to the guy in Malaysia. And then as she's talking to my wife about that other property, that douchebag hasn't paid his property taxes in 11 years, is about to get foreclosed on, but he's stalling somehow, right? This guy, how big of a douche this guy was, right? He started dating this other woman who was a lot older than him and made her file BK to stall the foreclosure. You can see their age difference. Oh my gosh. You'll be like, now I know why you got with this lady. She got with this lady. That's why I would call him that. No one would try to call people that, right? To stall out the foreclosure by filing BK. So that's why I couldn't buy the house. And I was about to give up right there. Like, well, you know what? Let's buy in 2021. F this dude. Excuse my language. Sorry. Like, F this dude. Whatever. I can't do this. You know what? I wasn't buying in 2020 anyways, right? I had that poor attitude again, right? I forgot about, I was open-minded, but I lost that patientness, right? I had the strategy. Remember, you got to have it all if you want to get your home, right? She reaches out to this guy in Malaysia, and then all of a sudden, he'll sell you his house. And in June, we got our offer accepted. As soon as we got our verbal acceptance, we sent the letter that we sent in our taxes returned right away to the IRS, right? We were nervous because of COVID, right? I don't know how long it would take for the IRS to get our tax returns. All of a sudden, 2-3 weeks later, we asked for a 60-day escrow, and the guy was okay with it, right? Because he was in Malaysia, he didn't understand what was going on out here. So he gave us a 60-day escrow, gave us enough time. We filed with the IRS, so I don't care who you are. Oh, man, I'm not going to buy because it's going to take too long with the IRS. It took 3 weeks. And it took 3 weeks. After that, we had to set up payments, right? We had to make certain payments too, and we got that all dialed in, and we closed in August of 2020. Okay? So that's how I bought my home. Of course, I'm going to put my money where my mouth is. I'm in the mortgage industry, and I'm here talking to you guys about mortgages all the time. I bought a house in the middle of this pandemic where it was really hard to buy, and probably one of the hottest selling markets there's been in history, right? Homes were not even lasting 2.5 months on the market, right? That means closed in 2.5 months, right? So think about this. Because I was open-minded, because I was patient and vigilant, right? Because I had a strategy and I was approved in the beginning of January, and I made adjustments to improve my approval, right? When that house popped up, I was ready to buy. You don't know when that house is going to pop up. You might not want to buy. You might say, I'm going to buy in 2022. You don't know what's going to pop up. And when it does, you want to be ready to buy it, right? I was patient. I wasn't even looking until 2022, right? But I was patient, seeing houses, because I didn't know what was going to come up. I see prices continually rising. We don't know how long these low interest rates are going to be there for. I did not want to take the risk, right? And if I had to make some adjustment, crap, the longer I wait, inflation was going to go up 4%. All right, guys? Let's say, well, the market could turn next year. If the market turns, I want you guys to know, talk to any realtor. Investors will come in the next market if there is a decline and gobble it all up and wait for the market to bounce back and sell it. I've talked to so many asset managers and I've talked to so many banks right now that tell me if there is a decline, a lot of these banks aren't going to try to foreclose on these people, by the way, right? The 3 million people in forbearance and the 9%, which is under 300,000 homes are underwater. They're going to try to work out mods on these deals, or they're going to buy the properties themselves. So if you are not in a position to buy, do me a favor, do not buy. If you're in a position to buy, but you're waiting for the second coming, it's not going to happen. Zillow is too strong. Redfin is too strong. They're putting houses on the market left and right. Zillow, Redfin. Why do you think all these companies out there are willing to pay cash for homes right now? Right? They know it's not the same market. But until you have a different mindset, like I just talked about, you're not going to buy a house in 2021, right? Remember, change your mindset. Be open-minded. Be patient. Have a strategy. And last but not least, get approved. Don't look at your credit like, oh, my precious. No one touch my credit. I don't want my credit to go down. You don't want your credit. Ask yourself this. Would you rather have your credit go down or run your credit last minute when you find the house and all of a sudden you have some boo-boo payment? If I would have waited till June to run my wife's credit, we would have had to buy the house with an FHA loan, right? That means we have to refinance one more time to get rid of the PMI, and our loan amount was big. I couldn't buy out the PMI even if I had the money to. We went 10% down. If I ran the payment on 10% down FHA, I'm going to pay more because of the upfront MI and the monthly MI. I would have had to buy the house and not love my payment, right? The goal is to love the payment before you love the house. The only way to love the payment before you love the house is to get approved and change that mindset. All right, guys, I'm with you in 2021. You guys stood by me. You guys have supported me, watched me grow on this channel, and helped me get my home. And I want to do the same thing for you in 2021, right? I'm going to be patient with you. I'm going to be your coach. I'm going to tell you, be open-minded, right? Stay in your lane. Be open-minded, but stay in your lane, right? Remember, be patient, strategy, and let's get approved. Even if I'm dealing with somebody, I talked to this one guy. I'm not going to say his name and put him on blast. I'm sure my managers don't like it because I'm doing this. I talk to this guy almost every freaking day. His cousin's his loan officer, but he doesn't trust his cousin, right? But he's still with his cousin, but I'm coaching him through to the end. And guess what? I'm cool with it because he was watching my show for over a year now. I'm not going to give up on him like I'm not going to give up on you if you use another lender. But of course, let's run the numbers, fam, and say, what's the best deal? We have one right now. I can't put it on here because we didn't redact it this afternoon. This guy, he's buying a house for $550. He's a veteran. He has a 671 FICO score. If he's paying his own closing costs, he should have gotten a 2.25, right? This guy went to a lender that gave him 3%. So I'm assuming if he got 3%, he's getting all his closing costs covered. But guess what? He's getting 3%, and he got a $661 credit. So he's got to cover $8,500 or $9,500 out of pocket for his closing costs. When if today he got 3% with myself or any one other lender, he would have gotten that $9,400 covered. This guy could have used that $9,400 to cover his washer and dryer, like I always says, his refrigerator, or painted his house for $9,400. But now he's at closing CD right now, which means he's about to go to docs. There's nothing he can do. He's gonna lose out on $9,500 because he didn't reach out and ask. All right, guys. So I'm letting you know right now, I'm here for you. You're going with another lender, another realtor, that's fine. But you should have somebody there for you to help remind you to be open-minded, remind you to be patient, remind you and go over your strategy and go over your approval with you. If you want to buy in 2021, let's do the do. All right, guys? Q&A. Let's Q&A. Luis Cervantes, a house is foreclosure. What do I need to buy it? If the house has been foreclosed on, you're buying at auction, you're paying cash. If it hasn't been foreclosed on, that means it's a pre-foreclosure. What you want to do is, if it's listed on the market, you need to use a realtor to write the offer. It's called a short sale. If there's no realtor, you would have to probably call a realtor to deal with the bank who's holding the note of the seller right now to do the short sale. Write up your offer, right? Once you write an offer, what the realtor presents to the bank is called a short sale offer, right? Then the bank does something called a BPO, broker price opinion, to see if it's worth selling at the price you're offering. Of course, if the home appraises for more, they're going to come back at you, right? Rebuttal you, like, hey, no, we're not going to sell to you at that price, but we'll sell to you at this price. But make sure when you come to a short sale, a pre-foreclosure, guns blazing, Lewis, you have your underwritten approval. All right. Hopefully that helps you out. If you need help, Lewis, definitely reach out. Karen Fabian Arcio, right, from Facebook. Seller accepted our offer, but we found out after that they just filed bankruptcy and house is included. It always is, right? Not always, but most of the time. Should we move forward and with the buying? For me, I don't know if I would wait it out. A lot of people who are filing bankruptcy, they're not trying, right? They're not trying to sell their house. They're using the bankruptcy to stall it out, right? And living as long as they can. So definitely, I don't think it might be wise to wait it out, right? I waited for our guy for like 3 months, right? And he just kept dragging it. Oh no, even though he just dragged it out, he kept dragging it out, right? So definitely I wouldn't wait if they're in a bankruptcy. All right, hopefully that helps you out. But if you have the patience, you want to wait around for it, only you know what's best. But most likely it ain't gonna happen. Jolene Sophia, what is release contingency? When you release contingency is when you a contingency is in contingent that this passes, right? So if there's an appraisal contingency, you'll buy the house in contingency that the appraisal passed. You'll buy the house in contingency that the home inspection passed. You'll buy the house in contingency that your loan is approved. When you release these contingencies, it means you're buying the house. And if you don't, you lose your deposit. So you release all your contingency. I'll buy the house if. A lot of sellers want those contingencies removed because the longer they keep a house off the market, they can't sell to someone else. All right. So you want to hold on to those contingencies as long as you can. If you're a buyer, if you're a seller, you're putting heat on the buyer to release those contingencies, right? Because you're either going to buy it or not. If not, then I'm going to take your deposit. All right. If you don't release contingency, they can't take your deposit. Guys, did you enjoy our live stream tonight? Hopefully you enjoyed the story of how I bought in 2020. Hopefully that encourages you, gives you hope, gives you the right mindset for you to buy your house in 2021. All right, guys? I want you to stay focused, get excited, and want you to know you're not alone, right? I'm here. My team is here. We're here to help you, educate you, empower you, and make sure you're connected with the right mortgage. If you have more questions, always reach out. Give us a call. Happy New Year. And we want to end all our live streams, right, with our attitude is gratitude. Without you, there will be no us. So thank you guys so much. Again, thank you so much for watching our show. If you have any challenges or concerns regarding what's a mortgage, call me 714-332-2526.